Here are some of the most important FAQs about the stock market, share market. 1. What is the stock market? The stock market is a platform where buyers and sellers trade shares of publicly listed companies. It helps companies raise capital and provides investors with the opportunity to buy ownership in companies. 2. What are stocks? Stocks represent ownership shares in a company. When you buy a stock, you own a part of that company, and your returns are based on the company's performance. 3. What is the difference between stocks and shares? While often used interchangeably, stocks generally refer to the ownership of a company in a broader sense, while shares specifically refer to the units of ownership in a company. 4. What is the stock exchange? A stock exchange is a marketplace where securities such as stocks and bonds are bought and sold. Examples include the New York Stock Exchange, NYSE, the NASDAQ, and the London Stock Exchange, LSE. 5. How does the stock market work? The stock market operates through exchanges where buyers place orders to buy shares and sellers place orders to sell shares. The exchange matches buyers and sellers, and transactions happen based on agreed prices. 6. What is an index? An index is a measure of the performance of a group of stocks, such as the S&P 500, which tracks the 500 largest companies in the U.S., or the Dow Jones Industrial Average, which tracks 30 significant U.S. companies. 7. What is a stockbroker? A stockbroker is a licensed professional who facilitates the buying and selling of stocks on behalf of investors. Brokers can be full-service or discount brokers. 8. What is an IPO, initial public offering? An IPO is the process by which a private company offers shares to the public for the first time. It allows the company to raise capital for expansion and other business needs. 9. What is a dividend? A dividend is a payment made by a company to its shareholders, usually as a portion of its profits. Dividends are typically paid quarterly or annually. 10. What is a market order? A market order is an order to buy or sell a stock immediately at the best available price. It is the simplest and most common type of order. 11. What is a limit order? A limit order is an order to buy or sell a stock at a specific price or better. It won't execute unless the market price reaches the specified price. 12. What is short selling? Short selling is a strategy where an investor borrows shares of a stock to sell them at the current market price, hoping to buy them back later at a lower price to return to the lender, profiting from the difference. 13. What is a stock portfolio? A stock portfolio is a collection of stocks and other investments owned by an individual or institution. Diversifying a portfolio helps reduce risk. 14. What are blue-chip stocks? Blue-chip stocks are shares of large, reputable companies with a history of stability, reliability, and strong performance, such as Apple, Microsoft, or Johnson & Johnson. 15. What is market capitalization? Market capitalization is the total value of a company's outstanding shares, calculated by multiplying the stock's current market price by the total number of shares. 16. What is a bear market? A bear market is characterized by a prolonged period of declining stock prices, typically defined as a drop of 20% or more from recent highs. 17. What is a bull market? A bull market refers to a period of rising stock prices, often driven by strong investor confidence and economic growth. 18. What is the P/E ratio, price-to-earnings ratio? The P/E ratio is a valuation metric calculated by dividing a company's current share price by its earnings per share, EPS. It helps investors assess if a stock is overvalued or undervalued. 19. What is the difference between a stock and a bond? Stocks represent ownership in a company, while bonds are loans made to a company or government in exchange for regular interest payments. Stocks have higher potential returns but also higher risk. 20. What is risk tolerance in investing? Risk tolerance refers to an investor's ability and willingness to endure losses in their investment portfolio. A higher risk tolerance often leads to greater potential returns, but also higher potential losses. 21. What is technical analysis? Technical analysis involves analyzing historical price and volume data of stocks to predict future price movements. It uses charts, patterns, and indicators. 22. What is fundamental analysis? Fundamental analysis evaluates a company's financial health by examining its earnings, revenue, debt, management, and other economic factors to determine its intrinsic value. 23. What is a stock split? A stock split occurs when a company issues additional shares to shareholders, increasing the total number of shares while keeping the value of each share proportionate to the original price. 24. What is an ETF? Exchange-traded fund. An ETF is a fund that holds a collection of stocks, bonds, or other assets and trades on a stock exchange. ETFs offer diversification and can be traded like individual stocks. 25. What is margin trading? Margin trading involves borrowing money from a broker to trade stocks or other assets. It amplifies both potential gains and potential losses. 26. What is a mutual fund? A mutual fund is a pool of funds collected from multiple investors to invest in a diversified portfolio of stocks, bonds, or other securities managed by a professional fund manager. 27. What is a stockbroker's commission? A commission is the fee a stockbroker charges to execute a trade on behalf of a client. This can be a fixed fee or a percentage of the trade value. 28. What is insider trading? Insider trading is the illegal practice of buying or selling stocks based on non-public material information about the company, giving an unfair advantage to certain investors. 29. What is a stock buyback? A stock buyback occurs when a company repurchases its own shares from the market, often to reduce the number of outstanding shares or increase the value of remaining shares. 30. What is diversification? Diversification is a risk management strategy that involves spreading investments across various assets to reduce the impact of any single investment's poor performance. 31. What is a margin call? A margin call occurs when the value of an investor's margin account falls below the required minimum, prompting the broker to demand additional funds or sell assets to cover the deficiency. 32. What are stock dividends? Stock dividends are payments made to shareholders, typically from a company's earnings, and can be paid in cash or additional shares of stock. 33. What is the role of a market maker? Market makers are entities or individuals that provide liquidity to the stock market by buying and selling securities at stated prices, ensuring smooth transactions. 34. What are stock options? Stock options are financial contracts that give the holder the right, but not the obligation, to buy or sell shares,